I don't know. I'm excited to see how Texas shows up because Texas is it's a different universe, right? Let's check and make
There
sure
is.
we're linked through. Are we live streaming? It's always like a tense moment when you're having to check and see if you're actually live. And thank goodness in this case we actually are live. Yeah, Pierre, awesome, man. It's so glad to have you here on the stream with us for a little bit.
Yeah, thanks for having me on, Rob.
It's a pleasure. So I was saying right before I hit the big red button that when I first had the pleasure of meeting you, you were knee deep in electrical and ASIC analyses and doing all sorts of brilliant things like trolling Elizabeth Warren, and having succeeded gloriously in that task and become a meme in the process. You've moved on to something that is larger, that is broader, that lives in the world of big finance. It's such a shift. I'm wondering what that's like for you.
Yeah, it very much feels like returning to my more familiar, well-trodden grounds. This is where I started my career at. It's where I got my education in financial accounting. And so this is far more familiar to me than voltage, amperage, and watts is the world of financial engineering. So very happy to be back in Excel and SQL and Python.
I love that. Can you, for those who don't know you, there's this thing in the Bitcoin space where I think people hear a name pop up a bunch of times, and then everybody just goes, "Oh yeah, that's Adam Back. We
Yeah.
just know he's Adam Back. He does some important stuff," and they never actually take time to read the Hashcash paper. They say the same thing. They say, "Oh, that's Pierre. Pierre, he's been around. He has a great beard. He wears a great hat.
Oh,
We
thank
see
you.
him walking with a CO2 monitor." Can you give us the broader arc of maybe even what brought you into Bitcoin in the early days and what your journey has looked a little bit like?
Yes, I'd say my journey started in 2005. I was a junior in high school and I stumbled across Austrian economics. And what I found particularly interesting about Austrian economics was their theory of the business cycle and how the monetary system is actually at the root of that, which was counter to all of the narratives that I was learning about in school about, what caused the Great Depression or anything like that. So that then made me into a gold and silver sound money kind of guy. In parallel to that, I also got interested in the philosophy of free and open source software. So I was installing Linux on computers. I was listening to Richard Stallman lectures about the freedoms that users should have to see the source code, to modify it, and to share it. I thought those two worlds would forever be in parallel until late 2012. I hear that Bitcoin is sound money and it's open source, and two wires got crossed, short circuited my brain, and I've been obsessed with it ever since. So that from there, started writing about it.
Yeah.
Co-founded the Satoshi Nakamoto Institute with Michael Goldstein.
Mm-hmm.
I still did begin my career in traditional finance, in the world of securitization. So mortgage-backed securities, all sorts of other paper-backed securities. And, from there, also started learning how to program and learned Python and SQL, got into software engineering, did some open source work with the Node launcher to help people connect to the Lightning Network. It's funny, we're recording this, the same week that Jack Mallers announced his new venture 21. Back then, he was recording videos of him working on his Lightning software Zap, and that was very inspiring to me. And so got really interested in Lightning there. Had the opportunity to implement Lightning at Kraken,
Mm-hmm.
which was really great. And then as the China mining ban shifted a lot of hash rate to the United States, that got on the radar of Elizabeth Warren, Senator Warren, who she has animosity towards Bitcoin and really towards crypto in general. We can psychologize why it really bothers her so much, but she started sending letters to the Bitcoin miners and started causing a whole of government attack on Bitcoin mining here in the United States.
Yeah.
So that's when I joined Riot in-house. Before that, I was on their board of advisors, joined them as the VP of Research to help provide kind of the intellectual underpinnings of our public policy response to Senator Warren. Hired Brian Morgenstern as our head of public policy, and he did such a fantastic job that we actually not only won under the Biden administration, but also helped contribute to the success of the presidential campaign. So now we have President Trump, and the regulatory environment for Bitcoin mining is 180 degrees different now. So we went from a government that was trying to suppress Bitcoin mining to now one that wants to encourage its flourishing here in the United States as part of an overall energy and innovation dominance agenda. Now, as part of that, the other big regulatory change is on the SEC side. So when I was looking at how do we securitize Bitcoin back in 2013, the Winklevi twins, they could not get their ETF approved by the SEC.
Yeah.
And it became apparent to me that the SEC would really just not approve anything that was Bitcoin backed. So my dreams would have to wait. And eventually, they got sued in court and they had to relent on the ETFs last year. But now with this new SEC, any kind of product that is properly disclosing the risks and is on the up and up from a regulatory and legal perspective, the SEC is not going to prejudge risk. What they're going to do is be merit neutral and let investors judge risk, which I think is the proper role for a securities regulator to fight outright fraud and to let good actors develop good products. And so that's why I was excited to launch the Bitcoin Bond Company as kind of the next phase in my career.
Yeah, I'd love to go a couple of directions on this. I of course, want to explore what you're up to with the Bitcoin Bond Company because it's A, fascinating, but B, it provokes something very interesting in people that we're beginning to see. And it's this kind of revulsion that people that they don't like are using Bitcoin. And this is a revulsion as old as Bitcoin itself. If you're using Bitcoin and you're using it in the wrong way, well, how can it still say Bitcoin? And then you have to kind of sit people down and remind them that this is still a decentralized and permissionless protocol. Could you talk to us a little bit about what does hyper-Bitcoinization actually mean? What does corporatization actually mean? It's provoking a lot in people, good and bad, but it's kind of the topic of the day. It's really divided people, but you've obviously taken a very firm stance in what you're doing with the Bitcoin Bond Company, and I'm very excited to hear why that is.
Yeah, so I think that throughout Bitcoin's history, people have had different visions for what Bitcoin's success would look like. And so I'd say on one end, you have people who really do see it as a peer-to-peer electronic cash payment system, and that success looks like paying for your coffee with Bitcoin at Starbucks or at a local coffee shop that is not corporate. It's really about empowering the end user, and that on the other end, you have the people who say, Bitcoin's just digital gold, it's just a store of value, and that it really, the payments narrative is a distraction. So as I would describe myself as a Bitcoin maximalist, I have an all of the above view. I'm like, why not both? I'm going to press both buttons here because we can. It can be both, and it ought to be both. And money, I think, always has been and always will be both. And in addition to being a unit of account, right, is kind of the third part of that. So when we think about Bitcoin adoption, when I first got into Bitcoin, I thought to myself, well, Bitcoin's so obvious that Bitcoin's going to replace the dollar next year, and everybody's going to adopt it overnight, and the dollar is going to zero. So this was like 2013. Fast forward 12 years, that has not occurred, but Bitcoin has grown by any measure. And so it's like, was I wrong? Was I right? Somewhere in between. And realistically, if we want Bitcoin to be a good force in the world, then we want to have a method of adoption that is really not so disruptive to people who are relying on existing systems. And I think this is part of the controversy is like, should we have an accelerationist view of we want the dollar to collapse, we want everyone to get rugged, and to say, for us to say, haha, told you so, you should have bought Bitcoin when we told you to, and now look, you're impoverished and all of your assets are worth nothing, and we were right and you were wrong. And so that's like, I think that would be a negative outcome, as good as that would feel. I think a more positive outcome would be that we gradually backstop all of these other systems using Bitcoin, so that we have a strategic Bitcoin reserve. So the dollar is backstopped by Bitcoin ultimately, and so even if somebody doesn't like Bitcoin, like Paul Krugman, he's still using Bitcoin because he's using dollars that are backed by Bitcoin. And then even in the stock market, let's say there's an index fund that has strategy equity shares in it. It's got 21 shares in it. So ultimately, every person who is dollar cost averaging into their index fund, they are backstopped by Bitcoin to some extent. And that, as Bitcoin succeeds, they will succeed. And so rather than having kind of an antagonistic view with the rest of society, why don't we instead try to help them in small but significant ways? And so that's where I do think that integrating Bitcoin into the existing system is it's subversive in the sense that we're helping people who they might actually not like Bitcoin at all, and they think it's too volatile or whatever, and we're never going to adopt it. And then philosophically, the critique would be that, oh well, aren't we selling out here? Because shouldn't the vision be about people using their hardware wallet with their Bitcoin node and their self-custodial Lightning wallet, and we're moving away from that? Well, again, they're not mutually exclusive. So we can continue to do both. So that's where I'm really all of the above. And I don't, to me, the maximalist position is all of the above. It's not saying that, it has to be this particular way. Because I also see it as a bit of a funnel. That is that somebody might start at the top of the funnel of, they made some money off of strategy. Well, now they want to learn more about Bitcoin. And now they're ordering their hardware wallet, and they're on river.com, and they're withdrawing their Bitcoin, and they're getting a BitX, and they're running their own node. And it's all just, or they're not, because they're happy with just the financial gain on the asset itself. And I think that part of Bitcoin's value proposition is that it does not rely on ideology to gain adoption, right? We don't have to stand on the street corners yelling through a bullhorn, the end is nigh, buy Bitcoin.
Though some like to do that.
Yeah. Instead, it's part of the invisible hand of Adam Smith. It's in everybody's self-interest to adopt Bitcoin in lots of different ways. And so whether it's politicians or bankers, the important part is really that, to me, it's that narrow part of fix the money, fix the world. And so in parallel, people are going to continue using the dollar. They're going to continue to use other currencies in parallel. But as Bitcoin gains adoption, that it will continue to grow relative to those other currencies, because it has those properties that we're also familiar with that make it superior.
What I love so much about your presentation is that, there are two things that are crossing my mind as I'm hearing you articulate this. First is that the book Resistance Money, fantastic book if you have a chance to pick one up and read one, they start with this philosophical premise of applying the veil of ignorance. And the veil of ignorance is this idea that if you were going to build a world or a system or whatever, if you didn't know where you were going to be in that system, that's the mindset you should have when designing the system. So you shouldn't know. If you're going to design the universe, you shouldn't know if you're going to pop out as a clam or as a human being or as somebody in Africa or as somebody in the US or as somebody in Asia. And so you have to design with this idea of the veil of ignorance. And it really is bringing up this idea that you're making me think about as it regards to maximalism, which is a system that's well designed operates in the background, and if it's a fair system, it can undergird everything. It can undergird everything, and it doesn't change it in this radical kind of wildfire that rips through the neighborhood and torches the houses, and then we all build our hyper futuristic houses. It's more like the slow process of changing a neighborhood where somebody comes in and they learn a little and they invest a little. It's almost like a ship of Theseus, right? Where you switch out a part, you put a new part in. But what you're articulating is that instead of pulling out a part of the ship of Theseus and replacing it with a different part until there's, is it the same ship that I had initially? What you're suggesting is we're actually kind of switching out some of the floorboards and replacing them with substantially better floorboards. And then you're switching out a little bit of the hull and you're putting a substantially better hull. And so over time, this incremental change is just going to raise the level of quality for everyone. You're going to be running on Bitcoin rails. I'd love to get a little more specific and talk about what you're doing now with the Bitcoin Bond Company. How does this become the direction that you point in to help make that happen?
Yeah, so part of it is just path dependency that I started my career in securitization, and so I'm very familiar with that world. And that when I look at the landscape, I think that what Saylor and Jack Mallers and others are doing in the equity markets is fantastic. And there is some crossover into the bond world with their convertible bonds, but ultimately convertible bonds are very strongly equity-linked instruments. And so what I'm interested in is essentially bringing Bitcoin to pools of capital that are heavily on the credit side and that are really the bond investors that, they need Bitcoin too. It's not just the equity markets that need Bitcoin. And they have portfolio mandates that require them to invest in credit instruments. So they do need a baseline wrapper around Bitcoin, which is a commodity from an investment perspective and from a regulatory perspective. So not only do they need a wrapper, though, they also need a risk transfer mechanism. So this is where the structure of securitization is important, where you essentially tranche up the risk so that you have one tranche that is de-risked because they are over-collateralized, meaning that the Bitcoin price could go down quite a bit before it starts hitting their principal and interest. On the other end of that, you have a junior tranche that is essentially leveraged long Bitcoin and is subject to first loss, but also has the greatest upside participation if things go well. And so that's really that risk transfer mechanism within securitization. That's a known financial engineering technology in the traditional system that they are very familiar with. The only part of it that is innovative is what is the collateral? Traditionally, the collateral is mortgages, automobile loans, credit cards, student loan debt, even more esoteric things like radio stations and cell phone tower cash flows.
Wow.
So you can really put anything in as the collateral and tranche up the risk. And so what I want to do with the Bitcoin Bond Company is put in Bitcoin as the collateral and gain adoption within the world of credit underwriting the Bitcoin risk.
Now, how do you imagine, is there a potential first buyer for this type of product or somebody who you see as being particularly interested in this?
So all of that is conversations that really are behind closed doors, to be blunt, because that quickly gets into regulatory questions with the SEC. And so in this world of institutional finance, beyond just me being able to describe it conceptually, I can't really get into anything more specific than that at this stage. Maybe in the future, Rob, we'll dig into describing events that have already occurred, which is fine.
I love that. I'm always happy to speak historically, and we have to make some more history in the process.
Yeah.
So I take your point, and it's really very interesting because what I think a lot of folks don't necessarily appreciate is that this path to hyper Bitcoinization has to happen through the existing infrastructure. Short of burning down the entire financial infrastructure as it exists today, which isn't going to happen. That doesn't mean that it's not built on some fragility or connectivity that poses some inherent risk to it, some cycle risk. It's not the kind of thing that happens in a day. Could you speak a little bit about what is the process of setting up a business like this? What does the structure look like? It's architecturally different from some things, but I'm sure it's very similar to some other things that exist in the current TradFi ecosystem.
Yeah, so with a traditional securitization, you have the operating company, which is actually originating loans, and then they're trying to get those loans off their books by putting it into a special purpose vehicle, so the securitization vehicle. With Bitcoin, the loans, there's no, that's not the asset. The asset is just Bitcoin. And so in a way, it's really providing direct financing to the Bitcoin network is what kind of the vision is. And so that's really, it's very different on that part, but the rest of it is very familiar of working with trustee, custodian, underwriter, auditor, that whole ecosystem of service providers. Thankfully, now we have custodians that are institutional grade that will custody Bitcoin, and that are well-known brands in traditional finance. And so that's, I think, a huge unlock on top of just the regulatory picture with the SEC.
Now I know this is early, this is cutting edge, and a lot of this, your company, the Bitcoin Bond Company, is going to be the first entity to really start to figure this thing out at scale. But to ask kind of the 10-year question, what does this look like in 10 years? Do you see places where you have changed the financial landscape? And I suppose the follow-up question to that is, what else has changed?
Yeah, so I think that if we look at who are institutional investors, right? So you've got insurance companies, endowments, pension funds. They are aggregating large pools of capital with a very long-term view of providing a service to their stakeholders in order to pay for somebody's retirement or to pay for somebody's insurance claim. And that they need to be able to put their money to work, right, to make sure that they're able to meet those mandates that they have from their constituents. So if they did not have any exposure to Bitcoin in any way, and they only had exposure to, let's say, dollar-denominated assets, and were in an environment where Bitcoin is outperforming all of those dollar-denominated assets, then they could find themselves in a situation where they're not able to fulfill their mandate to their constituents. And so getting Bitcoin into their portfolios in a manner that fits within their framework is crucial to make sure that ultimately Bitcoin is not disrupting parts of the financial ecosystem that are good, right? Like, I consider insurance to be good. I consider retirement planning to be good, right? Like, I don't think that those are the corrupted parts of the financial system. And, if I were to point to the parts that I don't find good, it would really be concentrated on the fact that the Federal Reserve is creating money out of thin air. And there's lots of people within the world of institutional finance who would agree with that. That if we look at what happened with COVID, they printed too much money, and that caused inflation, and that caused financial problems for a lot of institutional investors. And so it's really about bringing Bitcoin to that world where first on the credit side, but also on the risk transfer side, they might consider Bitcoin to be too volatile, and so they want something that is tied to Bitcoin's success, but de-risked to some extent. In order to move it through the investment committee approval process, where they've got folks who, there might be a little more risk averse than we are as young ones. And then on if you look at the world of hedge funds, for example, they're always looking for ways to outperform the market. They might even be looking for ways to outperform Bitcoin. And so they want to go leverage long Bitcoin in a format that doesn't create lots of issues from a counterparty risk perspective or from a timing perspective that they don't want to get liquidated.
This is what I really want to extend upon this thought, because I don't think we can appreciate it enough, which is that because of your junior year high school deep dive into the issues of the monetary system, and the monetary system as being the driving force of these emergent issues, what you're really hearkening to, which I love to hear, is this idea that this is the embodiment of, if you fix the money, you fix the world. So it doesn't sound to me that you're interested in pointing a finger at an industry outright and saying, oh, well, big business, TradFi, they're all going to go torch and they're going to be gone. What you're saying is no. Everyone is really they're incentivized to do things in the wrong way, because the thing that they're using that undergirds it all, the money, is the broken thing. And so if you fix the money and you bring it into this system on a long enough timeline, if I'm understanding you correctly, we will see what business models work and don't work simply because the money is fixed.
Yeah, and I think that Bitcoin realigns incentives. And so that is it's almost a cultural change. But we also have to keep in mind that we're going to continue to have a division of labor. And so there's still going to be firefighters and teachers, et cetera, who are not interested in picking stocks or in evaluating Bitcoin versus Solana, right? Yeah. That they outsource that decision making to a great extent to people that they trust, right? And whether it's their personal financial planner or a retirement fund that is managing that for them. And so there's going to continue to be a financial system, and that not within that financial system, there are good people who are trying to help, the economy and help normal people on Main Street. And so, yeah, I think that it is important to integrate Bitcoin into that, and gradually we'll see how things evolve. But I think that gradually we'll enter into the Bitcoin world that maybe the more purist vision we'll have of, hey, you just save your own money as Bitcoin and you don't need any kind of financial system beyond that. I think that that's going to be a long road, because it's hard for people to wrap their minds around that. What I've seen it firsthand is I try to educate people about Bitcoin and how to hold their own keys and all of that. There's for some people it clicks right away, especially younger generations who are very tech savvy and who also are willing to stomach the volatility of the Bitcoin price, right? And so that is a skill in itself.
Yeah. It's such a hoot, and there couldn't be a bigger difference between us and our older generations. But on a long enough timeline, we're getting older ourselves. 12 years ago, when you say that you were just getting into Bitcoin, is quite a stretch of time. Pierre, we have a couple of minutes left in our conversation. We couldn't be more excited to have you coming through to Thames this year in just a couple of short weeks. We're going to bring you back into the old ring to talk a little bit about the power side, which you have all but mastered, deep diving into the way the system works, understanding ERCOT. Can you tell us a little bit about what we can expect from that when we see you in a couple of weeks, and what you're excited to share with us?
Yeah, so what I'll be sharing will be a synthesis, a crystallization of my understanding of Bitcoin mining from the cryptographic hash all the way to the dollars per megawatt conversation. And so it really is providing kind of the relationships that connect those two dots, right? Because there's probably 5 dots in between. And so doing a deep dive into the economics of Bitcoin mining with also some motivation of why are we mining Bitcoin, right? What is the purpose of Bitcoin mining and establishing that value as well?
I love that, and I can't wait to see it just for my own personal interest, because this is the eternal battle of trying to explain to people what exactly it is that incentivizes and motivates us, because it's not quite code and it's not quite traditional business.
Yeah, it is a very special industry, near and dear to my heart still, even though I've left the industry.
That's right. Well, Pierre, thank you so much. We can cut the stream there, but I just want to say thank you again for joining us. We couldn't be happier to have you in a couple of weeks down in Austin, giving the presentation.
Yeah, thank you. I'm looking forward to it.
I love it. All right.